Hello, it is Saturday the 8th of February. I hope everyone is doing okay. It's been a wild week and really kind of not my favourite kind of week. I have to say, whenever a market makes a really big move, and especially with a big reversal like we saw on Monday with the tariffs on, tariffs off trading that went on, the market almost becomes untradeable chop after that, and that's certainly what we've seen for the rest of this week. We did have a really nice bounce off the lows on Monday after the tariffs got cancelled or postponed, and what we have seen since then is sideways chop, where instead of a bounce and then a little bit of a corrective pullback followed by a third move higher. If we take a look at Bitcoin first of all, and we look at where we are on the weekly, we really have been, for most markets, and this is not just Bitcoin, since the middle of December, we have been in a pretty nasty corrective sideways chop. How do we know it's corrective? Because if we look under the hood, most of these waves have been like three wave, and we are sideways at the highs, and we're sideways around this big $100,000 level. But it's not just Bitcoin, it's all risk assets. This is the NASDAQ, which is the tech index, which is Bitcoin is the most correlated with. This is a weekly chart here. We had a very nice rally following the election. Here we topped out mid-December, and we've been kind of chopping sideways since then, holding the weekly moving average, holding trend. We're holding above the swing high from the summer, and we're at, kind of coiling up really for a bigger move. There's no way to argue that this is bearish or a bearish reversal. It's just sideways chop. And if we count from the low that we made on the 5th of August, pretty much everything made this low. I would argue that this probably is, especially with these sideways overlaps, a wave 4, and we still have another push higher. If we look under the hood on the daily here in this NASDAQ, it's very common in a wave 4 to make a triangle or a wedge pattern. We could argue that these kind of lows are holding here. It might be something like this on the daily. And very often that's 5 waves instead of 3. So we could argue this is 1, 2, 3, 4, 5. We could also potentially take this down a little bit and say actually this is 1, 2, and we're still in that third wave of correction low. In other words, it subdivides into 3 as well. So this is 1, 2, 3. If that's the case, we can measure in this NASDAQ where that might end up after we rolled over on Friday with the jobs data, which wasn't very good. But, that's another story for another day. We're going to talk about crypto today. So that's how I'm seeing all of these markets at the moment, really since mid-December. Very, very difficult chop. Was hoping for a really nice move at the gate in January. It hasn't happened. And unfortunately, when this happens, quite often this can last into the whole of the first quarter. So we could see this sideways chop into March. And that's exactly what we're seeing in Bitcoin. Now, if we look at the lows here from the bounce that we made on Monday, since then we've had this really lovely bounce, and I was thinking that we'd made a lovely 3-wave correction and we could rally higher from here, and instead all we've done is chop sideways. And quite often that means that this 3-wave move here is part of a bigger, in fact, 3-wave move. So we've gone 3 down, 3 sideways, and we're going to see another leg lower and a retest of the lows. And so how do we know that we are going up again? I'm a big fan of Heikin-Ashi. I think it's like a moving average on price. I watch for that to move, and I like to look at it on bigger time frames. But for me, this is just a leave it and let's see. If we look at where we are in the monthly cycle, now that Bitcoin is much more of an institutional asset, we don't have options expiration on the ETFs until 2 weeks from now. And so quite often that means the week before OPEX we get a little bit of a dip. So I'm not too confident that we're going to have a face ripping rally next week. If we were to have a really nasty weekend shakeout, then I would think that that happens. But for now, this is really untradeable unless you are trading very short term. Like short term trading, this is easy. It's as long as you limit your targets and you're not expecting to buy and hold for the long term. One of the ones that we have been watching. So for me, Bitcoin is short-term trades only, and I do think, when you have a big move like this, quite often, if we go back to that daily with this really long-tailed candlestick, quite often these spike lows get retested, and I would not be surprised if that happens here. And we can see the lows of this range are in fact a little bit lower than where we are. So big picture, there is a possibility that we still do that bigger, kind of 87,000 thing. But if we count this as a double top, the low of our range is all the way down here at 89,000. So having kind of just made a marginal new high, it wouldn't be weird if we made a marginal new low here and continue to trade sideways while this 200 moving average catches up in this asset. So one of the ones that we were looking at to maybe do a little bit of an outperform catch-up trade was Ethereum. And Ethereum, of course, was let's take this off for a second. Ethereum was bouncing from a really good level. Previous swing lows from the summer and late summer in Ethereum on the weekly 200 moving average, and it was kind of the lows of this sideways range. However, if we're honest and we measure this swing high to low here, projected from here, you can see that we haven't quite reached that equal measured move level here in Ethereum. I'm just going to take my squiggles off. Let's hide this. So if we say that this is a big three-wave correction here in the middle, in fact this 2062 level, if we continue lower in Ethereum, is kind of where we will have made a three-wave equal measured move, and we will have properly hit the bottom of the range, and we're not quite there yet. We've had a pretty decent bounce. That would be normal for the first time back to a 200 moving average, but not quite the recovery that we have seen. If you are looking for Ethereum confirmation that we've bottomed and we're going up again, if we look at this on a daily, if you measure from this high to this low, project it from here, and this 61.8 level you would expect to be support, and if you get underneath it, it becomes resistance. But when you bounce from the equal measured move and you back test this 61.8 level, this kind of is a strong confirmation that you've bottomed. So for me, 2,800, if we bounce from this 2,000 level, 2,800 will be your first target on the upside, and back above it will confirm that we've made a three-wave equal measured move correction on the way back up again. So yeah, unfortunately, when we bounced this week from the tariff shakeout, I was hoping this 2,850 level became a level that we could hold above and keep going. And if we look, actually, it's become a pretty interesting resistance level. So unfortunately for me, I think that the path of least resistance is lower for Ethereum underneath 2,850, and potentially we retest 2,000 before we move up again. Some of the other, not everything looks quite this depressing. For example, Doge and Ripple do definitely look better than some of the others, and let's talk about why. Let's hide everything on this one. Let's start on the weekly. For me, this bounce from the weekly 20 moving average certainly outperformed some of the other bounces. It was the previous swing lows, it was the December lows in Ripple, and a really reasonable place for Ripple to bounce from. If we look down to the daily moving average, the daily chart, you can see that where we got stuck and where we couldn't get back above these daily moving averages in the middle. If we go down one more time frame here and look at how this correction unfolded, it does to me look very good for a 3-wave measured move. And from this bounce, because we've had this really strong bounce and this choppy overlapping correction, I do think if we can start recovering some of these moving averages, that we could see another bigger swing lower. And if we look at what we've done since yesterday, we are outperforming Bitcoin and ETH. We are seeing a little bit more of bounce, and so I'm looking for another leg higher. If we look here on the 4-hour, I would argue that potentially we've finished this 3-wave correction. Here's our first bounce off the lows, and I think we are about to start another swing higher over the weekend. And if we look at it this way, let's go down to the hourly. Here's our first swing off the lows that we made on Friday. Here's our 3-wave pullback. I'm expecting another leg higher, and this next leg higher will tell us whether we've bottomed or not in Ripple and Doge, and if we are going to see more upside. If we see a really strong wave 3 here, third wave from this low that we made on Friday, I would argue that potentially we're starting to see a bigger bullish reversal. If we just make a equal measured move from this low, which you can measure really simply. No, I don't want to look at that one. I'm looking at this little one here. So from Friday's low, if we just make a little equal measured move here, we get stuck at the hourly 200 moving average at 2.62, then this is probably corrective and we're likely to see another swing lower. You can see since we got underneath this hourly 200 moving average is a really good guide for trend, and I think that 2.62 and above there, a really strong close to retest these highs without a pullback, would suggest that we're seeing a wave 3, and then we should see another swing higher and potentially Ripple on the way back up again. If not, if we get rejected at 2.62, unfortunately, we're going to see one of those bigger 3-wave corrections. That's the problem. You'll see a swing, and it turns into a bigger one. Doge, very similar. Bounce from this is a daily chart, bounce from a textbook 3-wave equal measured move correction from the highs in December, bounce from the daily 200 moving average. This is what I mean here. This high to low here is equal to this one. Pretty textbook and a pretty good bounce, and just like everything else here on the hourly, I was looking at this and thinking, you know, very nice 3-wave correction here. If we can get above these hourly moving averages, we're on our way up again. And we have not managed to do it so far. In fact, we're in a really nasty declining channel here. I'm looking for a breakout of this channel and then a retest of the hourly 200 moving average. If we see, just like Ripple, a really strong move off this low, and 5 waves up, that would say potentially next swing higher. I'm a little bit optimistic because I think we could argue that this low that we made on Monday potentially was 5 waves up from this low here, so I'm looking to see if it can repeat. Now we could draw this as a little declining wedge here, and the people who drew it like this would say, oh look, it false breakout, didn't make it. When you can draw a wedge like this, very often your first place where you hit trouble will be where it's a parallel channel. So if you clone that so the ankle's equal, that means that if we do break out of this little breakout above these moving averages, this is going to be our first resistance, and then above it, always try and draw it as a parallel channel if you think you're going to see a breakout. So the way you do that, just clone this. That's going to be your first upside target. So if we bounce from here, likely 0.26, and then above it, we are going to look to break above that hourly 200 moving average and keep going. So Doge and Ripple, certainly some of the better looking ones at the moment. Within the altcoins, you know, particularly meme coins and AI agents coins, this week have been absolutely clobbered. Some of them are starting to have a little bit of recovery, and let's find a page of them. I don't know. Bonk's an interesting one, isn't it? Let's see. Okay, if we Tau's one of my favorite ones. Let's take a look at this page. Pretty much everything that this isn't one that for me made a really strong rally, this Bitensor. And this is another one which today is on the daily here. Look, we're turning up again, and I think potentially is beginning another leg higher. And the first target, if we really do see another leg higher and we see this pattern, is back to this 200-day moving average and this daily 50 moving average, and that potentially would see a breakout from this channel. Now we can draw this one as well as a Bitensor, as a declining wedge like this from these lows, and I would argue that if we break out this parallel channel up here, be likely where we come back to. At the moment we can draw this as a shallow declining wedge, but this is one that's, again, when they're not parallel, it's vulnerable to a little bit of a false breakout. So I'm going to stick with those moving averages as being the first one. We could also look at the fib pattern and see, is there a fib pattern here? If we draw this from this low, have we been respecting these fibs? This is so spiky, but I would argue that this 236, that, yeah, I think we have, which, you know, would be quite interesting, because this is a 786. We could potentially go a little bit higher, but this is looking pretty good for at least another swing higher. So the simple way for me is to measure. On the hourly, measure from this low to high, look at this pullback and say, okay, first target is a retest of the highs at 4112, and the second target is here at 477, which is these highs from the end of January in Bitensor. So this one, especially as it's now pushing above that hourly 50 moving average, now we can say, okay, we're wrong as long as we don't drop back underneath this, and we can have a little bit of a lower one. This is one that I think I'm going to buy today, and just try and trade that next swing higher. But if we look at, I don't know, I put on my page, if I look across this page, every single one, I'll go around, they are all having a pretty good go. These really beaten down alts are having a really good go at a bounce. If we look at this on a weekly, remember we had this a pretty good important weekly support and resistance level. If we were to bounce this weekend and close back above this support and resistance level, and even better, close back above that weekly 20 moving average, I think that we could say that this three-wave bounce is correct, and we could potentially see more upside. If I look at this on the daily, this is another one, big bounce. We're just looking for the signs that the next swing higher is beginning. And here on the 4-hour, anytime you see a little double bottom or swing failure pattern like this, you are going to look for a bounce, and the first target will be the top of the sideways range, and then above it back to the highs, and then we'll look for that equal measured move higher in Algorand. So if we measure from this low to this high, do the same, that would be 0.32 and then 0.357 for upside targets if we can continue to bounce in this one. And pretty much across the board, you know, what else is on this page? Trying to double bottom in Cosmos, Atom, Whitebit. This one's been a real big outperformer and a little bit of a pullback. I think personally this one has not had enough of a pullback yet, so I think that's got a little bit further to fall. That's not on my list. What's this one here? Stacks, STX. Oh look, so from the lows, this Stacks made an equal measured move, right? 1, 2, 3, two big swings higher. When you make two big swings higher like that, the most common retrace is a 786 fib. Now, was Stacks respecting the fib levels that we draw from the lows to the highs here? When you have a three-wave move, you put your fibs your fib retrace levels over both swings. Yes, it was. We did a very nice 61.8 rally from here. This is one of those ones where if we rally from here, this will be a Gartley pattern because we have a big bounce from the 61.8. We're now looking for a bounce from this 786. And our target is back to retest these highs. Now, let's look on the... So again, this is a really big level, as long as we don't have a close underneath. 0.823, I'm looking for it to go higher. So far, no signs of this correction. You know, we're still in a downtrend, aren't we, in this one? But this is one where I would, if I wanted to buy, or looking at this one, I'll draw this as a little channel. Here's our hourly descending channel. We've got pretty good 3 touches on the top rung here. Here's the bottom of our channel. You can see it kind of all. It's a bit, sometimes you have to fiddle with them, but the clear thing is that if we break out of the top of this and above these hourly moving averages, that would be our next swing higher. So you don't have to try and buy the exact low. You could put an alarm on this, and if it breaks out, you can add alert on the trend line. You get it on your phone. That would be kind of your bullish trigger. Now, again, I'm not calling this a bottom. I'm just saying that, you know, this is just a tradable bounce. So where would the targets be? If you measure from this low to this high, project it from this low here. First target is going to be this hourly 200 moving average. That's where this swing would be 61.8 of this one. Remember, that's if we break out here. If we make a lower low, you have to measure from a lower point. Okay? So that's our first target, and then 1.17 would be the equal measured move, and then we would look to move past that. And then obviously, this next swing is 1.618 of that first swing. Looks much more likely then to be a big impulsive move, and we will see a 5th wave and go from there. So that's kind of how I look at all of these alts. Like this one, what's this one? Optimism, OP. This, again, really interesting support and resistance level being retested here. Let's tidy up my chart and start again. This also looks like it made a big, maybe 3-wave measured move, so I would look for the 786 fib retrace from here to hold. Oh look, it did. It had a very nice bounce, and here we are again retesting these lows. This is an 886 fib retrace. The 786 fib retrace is the square root of 61.8, which is pi, right? So 886 is the square root of 786. There's another one here, a little one that's never used, called a 942, 0.914. That's the square root of 886. But if you bounce from this 886 fib level, confirmation that you've bottomed and you're going to see a bigger swing higher, would be back above this 786 fib level. So 135. So if we can manage to attempt a bigger bounce here, that would be, or if we see a 3rd swing higher in Optimism, that's going to be the target then. Measure from this low to this high, we see our correction, and up we go. And again, we don't know we're going higher yet. We're in this kind of channel. We could draw it like this and say we need to break above these highs, something like that, because until we do, or until we hold above these hourly moving averages, we're still going lower. We could go all the way down and retest these lows. So it's, you know, you don't kind of want to measure targets, exact targets, until you do, because if we go from here, then we'd be up here. But if we retest these lows, then I would say that 1.35, you know, would be your first target. So yeah, I've just done a whole page of random charts. That's how I'm looking for signs of bottoming. I mentioned Bonk. I think Bonk has a little bit further to fall, and I'll say why. I've drawn my fib levels all the way back from the launch lows in last summer, and I think this was a big 1, 2, 3, and the most common retrace is a 786, and we're not quite there yet. So we're having a little bit of an attempt at a bounce here because we're at a pretty interesting support and resistance level. We're retesting these lows from the summer, but I wouldn't be stalking this one. I think that potentially we've got a little bit further to fall because I rely on these fib levels. Now, if it was to make a really good move and get back above these weekly moving averages, or even just back above the daily moving averages, I would say, okay, probably we're not going to continue lower to here, and these previous double bottom level is holding, but wouldn't be on my watch list just for that reason for now. There's a few others. Let's take a look what's on this. This is INJ. Okay, INJ was one we were looking at because we could argue that, yes, this was a very nice fib level to bounce from. And if we look previously at INJ, these fib levels were really well respected. We did a very nice 61.8 move and then a bigger 61.838 move. And this 786 fib level for me, 11.34, I was thinking this would be a very nice Gartley pattern 786 fib level to an attempt a bounce from. When you bounce from a 786 fib retrace, your first target is the 61.8, and if you close above that, you've bottomed, and you're going to go back to the highs of this range, which would be all the way up here at, and the 38.2 fib at 32.75. So far we've got a little bit of a tiny tail. We are having a little bit of a go at a bounce. We had a pretty decent bounce off the lows on Monday, and we should at least see another swing higher. We might not get up here. Sometimes, you know, these previous swing lows become kind of quite tough resistance. We might just get up here up to 18, and this is another one where we haven't quite reversed yet, but we could be stalking it. We could come all the way back and double bottom here or retest this low. There's no guarantee that we're breaking out. If we take a look at this on the hourly and draw a little bit of a channel, or if we can hold above these hourly moving averages, make a higher low, something like that. If this is a double bottom here, and this is what this market is trying, messy but doing it, then our first target, if you are trading this short term, would be the highs here in the middle. And if we break above that, we're going to go back to these highs, and then we can measure our swing higher. Here, potentially, we could just do a little bit of an ugly range, and you know, really, unless we can get back above these hourly moving averages, there is the potential that we just keep going and retest the lows in INJ. So what about the meme coins? So last video, I think I looked at Popcat because I think Popcat looked at a really good level. It didn't quite reverse yet, but it's having a really strong move today. And if I draw my fib retrace levels from the low in June to the high that we made in November, this is bouncing from that 942 rarely used fib level that I talked about. So now, did the previous fib levels in this work really well? A really strong bounce, 50% bounce from this 50 fib retrace. Really decent bounce or decent support and resistance to this 236 fib. We had an attempt at a really good bounce from this 786, couldn't hold above the daily moving averages. So now here from this 942, we're doing kind of one of those weird bottoming patterns, or at least another leg higher. And we're going to do the same thing here. We're going to say back testing this 886 fib would confirm a bigger bounce, or back above that daily 20 moving average, which has capped us kind of all the way down since we dropped out the sky at the beginning of December. So 0.326 would be a good target for this bounce. If I look at this on the hourly in Popcat, I would expect this to kind of line up with an equal measured move bounce from the low on Monday. So by that I mean if I measure from this low to this high in Popcat, project it from here. Gosh, that gets us up to 0.3, doesn't it? Perhaps this is a funny correction here in the middle. Anyway, that's holding above 0.3 is resistance then, and holding above 0.326 says that we have bottomed and we're going to see a bigger move from down here. I would expect us then to go back, test those fib levels, level to level to level, because they are also pretty good support and resistance. So that would mean 0.52 and then 0.85 and so on in Popcat. If we go back up to where the daily moving averages are, I think 0.52 might be tough, because obviously we've got the daily 50 moving average there. Sometimes that can be really tough to get through the first time. So potentially a bounce in this meme coin as well, and that would be pretty good news for some of the others. What about in the AI space? As you know, I said Fetch AI, really interesting place at this weekly 200 moving average. Most of these AI agents have been really, really badly beaten up. So let's talk about one that I was watching. This is Imperial. This is a wrapped ETH one. These ETH ones with the ETH underperforming haven't been doing so well. But if I look at this weekly 50 moving average, has this made a big ABC correction? In other words, first swing, B leg, final swing. Looks like we've got 5 wave down. So there's a lot kind of suggesting that maybe if we measure this first swing low to high, we're looking again for this to be equal. We're kind of around that place. So let's take them off and see, are we seeing any sign of a bottom here yet? No, still a downtrend. So I'm just going to keep watching this. You know, sometimes you can put an alert on an hour, like an hourly 50 moving average. If it comes back to it and gets above it, not really seeing any signs yet, unfortunately, of kind of, yeah, double bottoms or the kind of stuff you need to, or bottoming patterns that you want to see. Maybe this one. It's a little bit Vader AI. Don't know anything. Okay, this nothing. None of this is financial advice. No, I'm not kind of. I think if we were to get back above these highs, maybe I'm back above this. I'm going to say none of these are financial advice. They're just charts that I look at. So, and they're trades. Okay, they're not investments. They are trades. I cannot stress this enough. One thing that makes me nervous, the thing that makes me most nervous for alt season is, you know, I remember it previously thinking there are far too many charts to scan and there are too many assets. How can it possibly work? I remember, you know, previous alt season thinking, gosh, 5,000 coins to scan. And I would, you know, basically scan based on moving average patterns and stuff. And even the trading view screener is really good for that. But at the moment, I think I read that there's 1 million new meme coins being released a week. 1 million a week. Okay, that is too much dilution, and that makes me nervous for alt season, unfortunately. And then I read this week about how many coins are going to be and tokens are going to be unlocked this year compared to last year. Just so please, these are trades, they are not investments. Okay, good luck. Let me know if there's anything you're looking at. But that's what I'm looking at this weekend, to see if we're seeing any signs of a bottom in anything yet.